I think the commitment of traders is highly suggestive of what we've seen in the mainstream press. I know I'm rambling on, but we've seen things in the mainstream press, Elijah, we haven't seen in years. And that is where the mainstream says things like silver is a tighter market and could be tight for a long time. That's not the exact quote, but that was the inference. And that was from a mainstream. And we've seen other columns like that. And this is sort of forecasting to, let's say, the mainstream players that silver is actually looking very, very good, not only here, but for the foreseeable future.
The gold and silver market is experiencing significant turbulence as prices continue to plummet due to increasing pressure from rising bond yields. Given the current macroeconomic environment and the supply and demand dynamics, silver is significantly undervalued at $22. According to David Morgan, the founder of the Morgan Report, the mainstream media has been discussing silver as being in a tight market with the potential for long-term tightness. He believes these kinds of statements haven't been rare in recent years and sees this as a significant shift in perspective. He sees that this might be an effort to inform the general public and mainstream investors that silver is showing positive signs in the short term and for the foreseeable future. Referring to the gold market, David points out a recent downtrend from around $1,960 at the end of July to under $1,900 in the middle of August. While gold prices rose earlier this year, the spot price of gold is now taking a tumble. This week, the resurgence of the dollar, fueled by hawkish signals from the Federal Reserve, caused the spot price of gold to dip below the threshold of $1,900 an ounce, its lowest value in 5 months. He sees this trend as the seasonal nature of gold, as August historically tends to mark a low point for gold prices. Regarding the stock market, David believes that a few significant stocks can influence the entire market index. There's been a distribution pattern in the overall stock market, with only a few stocks driving the market upward. He suggests that a shift in perception among average investors might prompt a move away from stocks and toward precious metals. He predicts this shift to gain momentum by the end of the year, citing the potential impact of various events. Now let's watch clips from David Morgan's interview with Liberty and Finance. Please watch the entire video and consider subscribing to our channel. Remember to turn on post notifications so you can see all our uploads. Thanks, and enjoy the video.
Gold, we were above 1960 about the end of July, and here we are midway through August. So as you said, 2 weeks, we've gone from 1960 to under 1900. Clearly a downtrend in the last 2 weeks. And this is not surprising. The seasonality of gold is the lows are almost always hit in August. Is the seasonality perfect? No, but it's more often than not. Silver and gold track together. I don't think the correlation is still 85%. I don't think it's quite that high, but it's still very high. And silver, very similar from the end of July at 24.50. We're at 22.50. What's interesting on silver, as you said, is it actually went below 22.50 and now it's above it. And so, it's debatable. I've said for years that the whites lead the yellow, and at times they do. And at other times gold leads. The commitment of traders looks as bullish as it has in a very, very long time. As you outline, the banks that are almost always net short are actually net long. And that just happens very rarely. So the setup is certainly suggesting a rally here. Problem with the COT that I've discovered over years is that the trend change is usually forecast by the commitment traders, but it's not very good at timing. In other words, we know this is taking place and people might expect it to be tomorrow or within a week. Sometimes it is, but oftentimes it's delayed. However, I will stick my neck out, as I've done many times. I really think it's close. In other words, I think silver will bottom first. It looks like it has, but we need more days of trading to be sure. The only thing that's lacking in the silver market isn't retail demand, although that's slackened off somewhat by the premiums. We know that. Certainly, industrial demand continues to grow, but it's the institutional investor that's absent this market. And that's rather interesting because normally on a $2 move that we saw a couple months back, where we went from basically the present level we're at to 25, that rally is the type of rally that the algorithms will point out to the trading funds, to money managers, to institutions, and they'll take advantage of it. Some did, but not to the level I would expect. So there's something in my view that's taking place that I really can't explain, and that is why is there no very little or less than average in institutional investment? It could just be the summer doldrums. It could be that simple that, during August, most Europeans take these very long vacations and are not in the market. That's part of it. But it could be that simple, or it may be something else. The stock market really works in a very simple manner. And I know that sounds insane with, all the variables that go into stock selection in companies, how they ebb and flow. But one of the best books I have, and I think I gave it away, it's not back here anymore, but it talked about how the stock market really works. And how it works is there's a flat line called the accumulation phase. And this is where the insiders or the managed money, people in the know, buy. And they buy slowly over time to not move the market. So it goes basically horizontal. That's the accumulation phase. Then it goes up. That's called the markup. And now they want to sell it all at a high price. So to sell at a high price, it's just like the accumulation phase. It's called the distribution phase. And the distribution goes flat line near the top. And this is an idealized curve. I'm sure people understand that. But you can't sell a big whack of it or it'll drive the price down. So you have to filter out slowly over time and sell it from strong hands into weak hands. And we've been in a distribution pattern for the overall stock market for a long time. It's only about 5 or 6 stocks that are actually keeping it up. But if you really know how to study the market, I'm a market student, still learning more, certainly don't know it all. But I do know enough to tell you what I'm about to say, and that is you only have to manipulate a few major stocks in order to make the index look good. And if you look at the overall market, it's actually pretty weak. So I do expect, am I right about October? Again, it's a seasonality, Elijah. The seasonality in gold is August. Is it always true? No. The seasonality for the stock market is October. Is it always true? No. But your question, the end of the year, I fully expect to see the metals do much better by the end of the year. I think there's going to be an event or multiple events that start to shift the perception of the average investor, maybe out of stocks or lightening up their stock position, or at least not adding to it, and moving more into the precious metals.
In a significant move that signals a global geopolitical shift, the BRICS nations have announced their plans to introduce a new currency backed by gold, presenting an alternative to the credit-based US dollar. With the decision made a month before the upcoming BRICS summit in Johannesburg, the initiative has attracted the attention of numerous countries eager to join this influential bloc. According to David, the primary concern regarding the debt problem is tied to the US dollar, not the BRICS currencies. Even if the BRICS concept were implemented, foreign nations would still need to convert their currencies to dollars to settle their dollar-denominated debts. The main thrust of the BRICS initiative is to facilitate foreign currency settlement, allowing countries to trade using their currencies without relying on the dollar. David suggests that this aspect carries more weight than the notion of a gold-backed currency that isn't directly convertible. Morgan sees that even smaller countries accumulate substantial amounts of gold, repatriating it to their vaults. According to IMF World Gold Council, the first 2 months of this year saw the most significant purchases of gold from Singapore, 51.4 tons, China, 39.8 tons, Russia, 31.1 tons, and India, 2.8 tons. Morgan believes that these actions indicate a growing interest in gold. Let's get back to the interview.
To me, it's, show me, don't tell me. As far as I can tell, the August 22nd meeting is going to be talking about it. I don't think it'll be implemented, or if it is, it'll be implemented in a very small way. But the idea is important. And the problem with it as it stands currently is it's not convertible. You can't directly convert the BRICS to gold directly, but you can indirectly. And so there's meaningful thought around it. I don't think that it's going to have as big an impact as many others have written about, but it could over time. But the initial thrust could probably move the metals markets on a what I'll call knee-jerk reaction, and then it settles down within a few days or a week or so. Once that's established, we got to watch it more carefully to see, again, if they actually implement something. Problem is that the debt problem is a US dollar problem. It's not a BRICS currency problem. And so no matter what happens with the BRICS, the debt owed by all these foreign nations are still dollars, which means they've got to go to the foreign exchange markets and convert to dollars in order to pay off the debt. Now, the main thrust of the BRICS isn't so much gold or gold backing. What it really is using foreign currency as final settlement. So I can settle with Brazil with their currency. I can settle with India with their currency. I can settle with Russia with their currency. That means you don't have to convert to the dollar to buy oil, as one example. And that's very powerful. So I think that's the main thing to think about coming out with this announcement that's supposedly or probably will take place on the 22nd of August. And that carries more weight than a gold-backed currency that's not convertible. That goes back to the, show me, don't tell me. Because if you follow the gold trade, which you do and I do, you see even these small countries are buying for them massive amounts of gold and put it in their own vaults. You're seeing gold recalled from, the Fed or the United States to repatriate their gold to their own country. So if you just see what's actually happening rather than what's said, it's very clear that a lot of companies are basically getting their hands on, I'll say, as much gold as they can. That's probably an exaggeration, but it's obvious that these countries are moving into the gold market. So certainly it has a big impact. And, whether you could trade in gold through the BRICS currency or not, right now, no. If you could in the future, that would certainly have a big impact. But there's no doubt in my mind that the run to gold started. It's just started with the banking system. It hasn't really spilled over into the institutions. I'm talking about pension funds, managed money, your major commercial banks, even your money center banks. I mean, it's only the bullion banks or banks that are associated with their balance sheet looking at gold as a tier one asset that happened with this Basel agreement that are really concerned about gold. The gold trade is actually diminished from the banking side basis, the gold trading desks. A lot of those just disappeared because the requirement under the Basel agreement was cumbersome enough to say, you know what, we're only making 2% of our bottom line trading gold. Get rid of it. Get rid of it. We don't need that kind of hassle for a 2% increase on our balance sheet. So it's a consolidation of the gold market. And I think that trend will continue. But there's a lot going on behind the scenes that most people are not cognizant of because they don't know where to look or whatever. So they rely on, shows like yours to really understand that even though gold is going nowhere, you might call it another accumulation phase at a higher level before the powers that be do the markup.
The gold and silver markets are likely to experience volatility shortly. However, silver is undervalued at its current price, and the mainstream media is increasingly discussing its potential for long-term growth. This could lead to higher prices for silver in the coming months as investors seek out haven investments. What events might play a role in influencing a potential shift toward precious metals by the end of the year? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.